Hello, everyone. Welcome to another session. So, in this session, we will be talking about the current market situation. So, the market is in turmoil, and there are headlines and losses, and people are losing so much of money, and your portfolio might be in red at this point of time. What you have seen before 2 months and what you're seeing now will be, there is a big difference because Nifty have fallen 10% from its lifetime high. So we have seen Nifty touching 26,000 and Nifty is now at 23.5, which means more than 10% dip is there. And this is one of the biggest dip or correction or the crash that you can say that you see post COVID time, right? So investors in just 2 days, last 2 days, if you see, have lost around 12 lakh crore. So now the question in everyone's mind is, what's driving this relentless sell-off? Why FIIs are so much into selling? And this month itself, they have sold around 1,15,000 crore. Okay, so there are many things that we need to discuss, from inflation, related issues to RBI's rate hikes and everything. I'll try to break it down, and we will also discuss about the rupee depreciation and that's impact also. So whether you are a retail investor or institutional investor or whatever you are, whatever your position is, what's for the market, that is what we are going to discuss in this session. So I'll try to give some insights. So let's get started. Let's try to understand what is actually happening with the market at this point of time. See, the Nifty and Sensex, both indices have seen sharp corrections and more than 10%. 10% means it's very much, right? So this is what exactly before I told you. It's more than, this is the biggest one, biggest correction or dip that you see post-COVID time. Sensex lost around 8,000 points. That means again 10%. So again, if you look at mid cap and small cap, it is even worst. At one point of time, this were the investors' favorite. You are getting a lot of returns. But if you see the last day itself, Thursday, both indices were down by one day. 2.6% and 3.1% respectively. And that's again signaling a kind of significant shift in the market sentiment. So if you see again this mid cap and small cap, these were once the favorites and given exceptional return, and now again coming into huge sell off. And this is again a rule that we always see this, right? When the money is taken out, when the flight of FIIs take out their money, right? What will happen? First they'll take from the small cap, and then they from the mid cap, and then comes the large cap. That's how the order is. And when they pump in, it is the reverse. So mid cap and small cap is actually bleeding and losing all the returns also. So when we talk about the small caps, I'm talking about below 500 crores are already very volatile, but at the same time, they offer high returns. But at the same time, there are significant risk also involved. So when I say, when I talk about mutual funds and everything, that's the reason why I always talk about, diversifying your portfolio across large cap, mid cap, and small cap. This is also one of the reason. So there is a good growth prospect. Okay, it can 10x, 20x also at times, but at the same time, it comes with significant risk also. So high volatility is there. Now, if you look at mid cap means I'm talking about market capitalization ranging between 5,000 crore to 20,000 crore. See, guys, when I talk about market capitalization, based on that only, you will see the Nifty 50 also. Top 50 companies with the market capitalization, which means it is very easy to calculate. You just multiply the share prices with the number of shares. That's what you mean by market capitalization. So what is the market capitalization of Nifty? If you see, add every 50 companies market capitalization. Okay. So these small cap and mid cap is facing significant challenges due to rising cost and declining demand and everything now at this point of time. Again, if you see sector wise, almost all sectors are in red at this point of time, from real estate to metals to FMCG to auto. Almost all the sectors are red. Again, if you see metal giants like JSW Steel, Tata Steel, and Vedanta are again seeing sharp declines last day around 2%. And the auto sector, if you look at Tata Motors itself, has fallen 25% in the last few months. So that's again a big correction. Okay, so auto sector is again not doing good. Maruti and other automakers also struggling, due to the declining consumer spending. Okay, inflation actually is one of the reason. Inflation has pushed households to cut back on non-essential expenses, and that is again hitting demand across the industries. So what will actually happen when inflation is there is the non-essential items, they'll hold it during the time of inflation, and essential items itself you need to spend a lot, right? If you see onion itself is costing you more than 100 rupee. So this inflation is mainly due to food inflation. Okay, so that is something which we need to also understand. So when inflation is there, people will shift from non-essential items to essential items. They'll focus on essential items. I'm talking about middle class and other things. So the demand in the non-essential items, when I talk about the cars and other things, these are non-essential phones, these are non-essential items. Okay, so inflation, if you look at October inflation numbers, have shocked everyone. National average, if you take state-wise also we calculate, national average if you take, it's around 6.24, and that's highest in 14 months. And there are some states or like Chhattisgarh, they are also witnessing the certain higher rates than this, but I'm talking about the national average because the policies and everything is based on national average. So in this itself, food inflation is actually the main issue, and the food cost is rising like 46% also at some situations. And if you see, onion itself is a bigger example, right? So this means middle class households are now spending significantly on their daily essential, including food, and that is actually squeezing the disposable income. So whatever you're getting your salary, you don't have now time to invest or save. You need to spend for essentials because of this almost 40-45% the price rise in many things, and overall inflation is around 6.24. Okay, now what could be RBI's move? See, whenever inflation is high, what RBI will do is, inflation is because of lack of supply or due to higher demand. So here supply is the main problem. So if demand is the problem, RBI will try to increase the interest rate. Now here, if you see, food inflation is mainly due to the lack of supply, and inflation is because of lack of supply. So we need to promote growth actually, and we need to see whether RBI is going to increase rate or not. But normally when rate inflation is high, the simple thumb rule or the regular norm is increase the interest rate. Or now, since it is depending on the supply issue, they may keep it unchanged also, but there is a possibility that they will increase the interest rate, and that will further worsen the issue. So that will drain liquidity from the market. Why? RBI is increasing the interest rate to avoid liquidity. Because of liquidity only, prices are high. That is what the assumption is, right? When liquidity is there, when money is there, money supply is there, people have the purchasing power, and that's when people will demand more, and that's when the prices go high. That's when inflation is there. So to control inflation, what RBI will do is RBI will try to reduce the money supply by reducing the liquidity, by increasing the interest rate. So what will happen is, the borrowing from bank will become costlier when the interest rate is high. So it will affect both banks and consumers equally. Banks' profitability will come down because people won't borrow. So bank Nifty will fall. That is one thing. Banks also will be affected. Their profitability will come down. Consumers also won't have money to buy. And industries also face problem as they cannot invest. So if, let's see, December Monetary Policy Committee MPC meeting, and that will be very crucial in deciding the direction of interest rate and their impact on market liquidity. Let's also look at the dollar factor and ripple effects. See, again, strengthening US dollar and weakening Indian rupee, again adding fuel to the fire. With the dollar gaining strength, the rupee is actually losing value. That is again putting pressure on imports and increasing inflationary pressure. So what will happen is, when rupee is declining, okay, or when rupee depreciate and dollar appreciate, the imports becomes costlier. You need to, the imports and exports are calculated in dollars, right? So when you import, earlier, let's say you are paying 100 rupee. Now when rupee depreciating means dollar appreciate, you need to pay 1 or 2 rupee. So in the price actually remain the same. In terms of dollar, if you calculate, it remain the same. Just because rupee depreciated, you need to pay more rupee. Okay, so imports becomes costlier. So you try to avoid import. So what will happen automatically? The price will go up. At the same time, there are things which cannot be avoided also, like crude oil. We don't have any other option. So when we import crude oil with higher price, then again that will fuel to the inflation worries. And exporters will definitely get advantage. So IT sector and all will get advantage when rupee depreciate. But normally when rupee depreciate, the imports become costlier. Imports will become less. So supply here will become less. And what will happen? The price will go up. So rupee depreciation is also one of the reason for this issue. And the foreign investors are losing the confidence in the Indian market because of all these. So that is again the reason why FIIs are selling. So if you see, there is a recent SBI report, and in that it has been mentioned that rupee may depreciate another 8 to 10 points during this Trump presidency, and it can go even to 94, 95 level in the next 3, 4 years. So that is again adding worries to the India's economic scenario. Now, despite all these, domestic institutional investors, that's a surprise here, and retail investors have been pumping money. And they are, despite the fact that FIIs keep on selling in the entire year, every almost every month they were selling, and in the last month, if you see, almost 1,15,000 crore. But SIPs contribution hit record high, with over 25,000 crore flowing into mutual funds in October alone. And asset under management AUM for SIPs have now reached around 13 lakh crore. That shows the resilience of Indian retail investors. So because of this, otherwise, see this kind of FII selling. If you see how the market will survive, it is now surviving because of this SIPs and AUM and the retail investors and this mutual funds only. That much fund is there to pump in. Okay, now see this market correction, if you see, raises critical questions. Can we control inflation at this point of time? The fact is, it is difficult because firstly, it is related to food and because of supply. So without managing that, it is very difficult and it takes some time. Long-term measures are required. But this inflation, as and when the supply comes, it will be okay. Okay, so normally supply side inflation, it is very difficult to control because rate hikes have nothing to do with it. In fact, rate hike will worsen that. Okay, so RBI's rate hike, will it bring stability or not? We need to see after that. And most importantly, how long can domestic investors continue to support the market despite this, relentless selling pressure? So whenever there is a dip, DIIs are buying, right? But how long it will continue? And with factors like Donald Trump policies which are coming, and global inflation is also there, global slowdown is also there. India's domestic challenges is on the other side. The way forward, the road ahead is clearly uncertain. Now, guys, if you are investing in stock market, SIPs or mutual funds, now it's time to act wisely. Stay informed, diversify your portfolio, like gold, silver, and large cap, mid cap, small cap, real estate. So guys, that's all about this session, and thank you so much for watching. I hope you understood some critical points, why market is falling and what you need to know about this. Thank you so much.